Hi everyone, Jon Sharp, President of the Hardenbergh Insurance Group, coming to you again today from HIG Academy. Today we're here to talk about the hardening market. If you haven't been involved in insurance prior to 15 years ago, you probably don't even know what a hard market is. Fact is, we haven't had one since 2002, 2003, and that of course is because of 9/11. A hard market is when the insurance carriers start to tighten up their guidelines and increase premium due to losses they've either sustained or they anticipate sustaining because of risk that's occurring in the marketplace. When this happens, premiums increase across the board for all clients. Today I want to give you a brief background as to why we're starting to see a hardening market and also make you aware that it's coming. Increases across the board on the business insurance side will continue to be delivered over the next 12 months. First, if you think about your policies, you probably recognize that over the years, property rates in particular have gone down. Maybe slightly, but on a regular basis, they've gone down for probably 5 to 7 years. That's one reason we're starting to see a change. Second reason, if you think about the last 3 years, just natural disasters as a whole, we've seen fires, we've seen floods, we've seen tornadoes, and of course, now we're seeing and dealing with COVID-19. That also factors in. The third thing I want to talk to you about is investment income. While you may not put together investment income and your insurance premiums, they actually correlate together quite a bit. We've seen mortgage rates at a historic low, which means interest rates are at a historic low. So as the consumer, that's great news. We can refinance our mortgages on our homes, or we can get loans for our businesses and see very low rates. But that's not great news for the insurance company. Insurance companies invest very conservatively. So as interest rates go down, their income goes down. And to offset that income and to cover for potential losses down the road, they need to increase premium. I'm sure you didn't know this because I didn't know it until I recently read it, but for every 1% loss of interest income the carrier experiences, they need to see an offset of a 3% reduction in their risk or their losses to offset that 1%. Unfortunately, that's just not a reality. So the offset, they have to increase premium. While I would prefer not to be the person that's delivering the message to you that your business insurance premiums are about to go up, it is a fact and we need to deliver that message. If you haven't started planning for those increases with your risk manager, I encourage you to do so now. And if you're not having conversations about it with your risk manager, we'd love to have those conversations with you. Give us a call. Again, I'm Jon Sharp, President of the Hardenbergh Insurance Group, coming to you from the HIG Academy, talking to you about the hardening market. Thanks again.